we'll get started. Unfortunately, if someone wants to say something, you're going to need to type it in the chat because, unfortunately, my thing's fucked for some reason, one reason or another. But anyways, so I'll share my screen to begin with. I wanted to start off with the topics that I've put in for this catch up. Which, if we go over here, so I wanted to touch on, is the land cycle and crypto cycle still on track? And then I also wanted to just review my approach so far in this current crypto cycle, and just sort of go over what it is that I've learned, what I feel that I've gotten right, and where I've come unstuck or hasn't been the smartest decision, and what my current thinking is on how I'm going to adjust my approach come the next cycle. It's not concrete yet because we are still, this cycle isn't complete. And once I do sell up, I do a proper review of how things started, how they went, and how they ended. But I do like to sort of do a bit of a mid cycle review just to sort of gauge where I'm at and what keep myself grounded a bit. G'day, Starcy. Good to see you. Unfortunately, for some reason, I can't hear anybody talk, Star. So if you do have any comments, just chuck it up in the chat, mate, and I'll have a look. Yeah, sweet. Thanks, Nomad. So we'll start off with the land cycle, and we'll see where that's going at the moment. So to look at the land cycle, I normally bring up the US house price index. It's not the best chart because it is just a line, and it doesn't really give you great depth. Like the best chart that time frame you've got is, I'm pretty sure it's a monthly. I don't even think you can click the weekly. No, you can't. Is the monthly, but in any case, it's still going up. So based on the land cycle of going up, it is still doing that. If we look at the prior land cycle, we peaked in around May 2007, and then it was down until around April 2011. So that coincides with the 4 years down rule. Then we have about 7 to 8 years up. So we've got April 2011 is when it bottomed. So that's the start of the new cycle. And pretty much had a bit of a lull around Feb 2020, which was the COVID crash. So this was probably a little bit extended, I guess, 8.5 years. And when you have the mid-cycle correction or recession, if you will, the land cycle or property prices are very they're affected only in a minute way. They don't really feel the brunt of that mid-cycle correction. It's predominantly your equities that cop it, which is virtually what we saw as stock markets crashed. And once that started picking up again, we can see that the second half of the cycle has really ramped up. Had a little bit of a lull in 2022. That was when we had a bear market in stocks. And now we're starting to take off again into the winner's curse. I'd be surprised if the winner's curse is more aggressive than what this period here was. Just because there was a crazy amount of money printed during those COVID times to prop up the governments felt that they needed to prop up the economies. So they were pumping in an astronomical amount of dollars. So I don't think the winner's curse, which is typically the sharpest rising part of the market is necessarily going to be as sharp as what we saw here. That's almost artificial growth. It's not necessarily natural. We can see leading into the peak over here, as we got closer towards the end of the cycle, it started to naturally pick up. You can see the nice curve in the chart, but up here it's just like boom, and then straight up. It looks less natural in my opinion. So I think it's still going to generally go up, but just not as sharp as what we're seeing here. But anyway, back to the context of the cycle. For me, I still think we are definitely on track. We got 2011 was when this cycle started. So if we work on averages, it's about 14 years, 14 and a half years up. That puts us at around the middle of 2025, so middle of next year, towards the end of next year and into 2026. I know that that's quite a broad time frame, like we're talking about an 18-month period, but in the grand scheme of things, this is a 18, 19-year cycle. Some of us will only see 4 of these cycles in our lifetime. So it's hard. You can't really pinpoint it down to a month as such. Not this far out. Maybe once we start getting a little bit closer to the end and we start seeing some warning signs, i.e. consecutive rate cuts, things like that. That's when we can start saying, all right, the end's coming. But for now, it's still very, very well intact. And I think, we're still looking at another sort of probably 12 to 24 months of this land cycle going up. Now, how does that correlate to stocks? So if we saw here, market peaked in, it says April 2007. That's for the house price index. If we go into SPX, this market peaked about 6 months later. I have seen some people that follow the 18-year land cycle, and they're extremely highly regarded in the space. Their sort of train of thought is that they think stocks are going to continue up until around 2008, 2007. I'm probably a little bit more of a skeptic. I think when the house prices eventually tip over, we've got about six months to start exiting our positions. That's where I sort of sit with it. I almost see this as like a bearish high, similar to what we got with Bitcoin in the last cycle, where it made its high at 65k, and then retraced 50% on the move all the way down to 30k, 29k, and then came up and hit 69k. That was quite a bearish high. With hindsight, at the time, perhaps not so much, but with hindsight, it was a bearish high. So as far as stocks go, they're definitely following the trend. We can see it took a lot less time for it to break out. So it hit its high in October 2007, bottomed in March 2009. So that's about an 18-month down period, and then it started picking up again. So that's when the bull market has essentially started at that point there. And it's just been growing ever since. That's the COVID low, COVID dump, taken off again. And then we had the banking crisis where we saw Silicon Valley Bank collapse and a few others. And it just takes off. And when you zoom out, the COVID low, it doesn't look as severe when you're looking at it from this perspective. And same as the banking crisis, it looks like it's just a correction. Now that we're zoomed out, we're looking at it in hindsight. But at the time, there was so much fear around that we're going to go down to 2,000 points. We're going back to the COVID lows. We're going to hit a depression. We're going into recession. Everything. Elon Musk was tweeting about it. Elon actually marked virtually the exact low when he said that it's going to be multi years before we get out of this recession. It marked the exact low before we started taking off again. But nonetheless, here we are making new all-time highs, and on the monthly chart, things are looking pretty good, and everything looks like it's intact from a land cycle perspective. Now, we'll get over to Bitcoin. Maybe I'll go into this chart. Oh, it's heavy. I've got a fair bit of stuff going on here. We'll take a look at the last cycle. Might go to the weekly. Hopefully it cleans it up a little bit. Okay, so this is the last cycle run that we had. We've got the Elliott waves here. 1, 2, 3, 4, 5. And then we're going into our corrective waves here. So that would be A, B, and then down here to C. And now we've started the new cycle. How am I going to do this? Let's just delete some stuff so it gets out of the way. Oh, shit. Well, you're going to have to bear with this a little bit, I think. So this is the wave 1 coming up here. We've got wave 2 coming down, wave 3 going up, and wave 4 looks to be that 53k low that we had. And I'm pretty damn confident that this is the low. I'm a bit gun shy in calling it, but yeah, just after the last 2 weeks that we've had, they're extremely strong. We may be having a bit of a pullback now, but that's because we are forming forming our sort of lower time frame Elliott wave count. So we've got our 1 goes to the top, and then the second wave always comes back down. So maybe it comes to about that 62.8, 63k. It could be even more shallow down up at 65. It doesn't really matter, as long as it doesn't get back down here, and ideally it doesn't get back below 60k, or as long as it doesn't close back below 60k. Or we can put that there. Then we've got the third wave that goes up, and that'll be the breakout. 4 and 5. You get the picture. But this is very much still a bull market. Bull market started way back here in November 22. We are coming towards the end, so you need to start working on what your exit strategy is if you do plan to exit at around the top of this cycle. You really do need to start working out what your game plan is, what price it is that you're sort of happy with, whether you want to go on based on, all right, if my investments reach this price, I'm going to exit, or whether you're going to be watching the market and wait for a change of trend before you start looking to exit. If you want to exit, have a plan. Don't just leave it to sort of going off a whim. Because if you do that, you start inviting emotions into the decision making, and chances are, not always, but chances are, you'll regret whatever decision it is that you have made. But there is the other factor where, and I need to do a little bit more research into it. So basically, what I've got here, this count, is the same as what's happened back here in the last cycle. So something that we do need to be somewhat open-minded to is, are we going to get a blow off top like what we've seen previously, where it just disappears into the bear market? Or are we going to get a corrective wave that actually comes right back up to form more or less a double top? Because in the prior cycle, we did see a lot of alts not necessarily have a magnificent run in this initial run up, but they ended up popping later in this second run up. And even after the fact, there were some alts that really took off in, say, December, January, even into February, when Bitcoin had already lost quite a bit of its momentum and it was already well and truly into the bear market. Like, it was trading down at 40 odd K, dipping into the 30s before it eventually capitulated. So when it does come to the alts, it is a bit dicey. I like to take the approach with alts: be happy with the trade that you've made. Don't look at what could have been if the price goes past your exit strategy. Just be grateful for the gains that you've made. You've done the right thing. You're not hodling till we're back down here at the lows and your alts have lost 95% of their value. And then you're really looking back and saying, Jesus, I wish I sold back up here, or even here. When your alts have lost 95%, it's a long grind, and you really don't want to be in that position. So if you're looking to play the crypto cycles, have an exit plan, stick to it. If you want to talk to me about it, by all means, reach out to me in premium chat or in my DMs. I'm more than happy to go over it with you, and obviously not provide financial advice, but put some suggestions or some perhaps alternative ideas out there for you to consider, if maybe a different approach is better for you. So now I want to move on to, and sorry if I've come across like I'm rushing a little bit. There's just a lot to go through, and I haven't even really gone over charts yet. Bull market started November 22. Yeah, that's correct, Star. So the bull market starts when the low is in. It's the same as a bear market starts when the high is in. So if I go back to here, technically the bear market last cycle started in November 21 at the top. That's the start of the bear market. We don't know that it's a bear market yet because we haven't got confirmation. But confirmation here would have been breaking down below these support levels and then sort of sailing off into the sunset. And the bear market lasted practically 12 months. So bear market is from the top to the bottom, and then the bull market starts once the low is in. So that's why the bull market started back here. So if for anybody that's saying the bull market is around the corner or it's just starting, it's not correct. We're 2/3 of the way into the bull market already. We're coming towards the end of the bull market. The bull market is the largest portion of the crypto cycle. It's not there's no bear market, bull market, no market. It's either bull or bear, and the bears are certainly not around as long as the bulls. Yeah, no worries. All right, so now I wanted to talk about what I feel that I've done really well, and what I have not done so well. I'll start with the good and finish with the bad. So I'm really pleased with how I approached Bitcoin this cycle. I can show where on the chart where I started DCAing into a position, and it was on this breakout back here. I didn't start DCAing here because I had a heap of limit orders in at around 14K, which would have virtually filled up about 70% of my bag. So I was waiting for that breakdown. But then when it broke up above these tops at 17,150, that was when I was like, all right, we need to get into the market. And so I basically DCA'd from here all the way up to 35K. 35K was when I was cutting my DCA. And I used a similar tactic to what I've spoken about previously. Just the triangle tactic, where the higher we go, the less I DCA. Then when it comes back down, I increase my DCA amount. Similar tactic to when we're exiting our positions. You have your targets, and the closer you get to your target, the more you exit your position. So yeah, regarding Bitcoin, I'm really happy with how I went with that. My average buy is around 22.5K. I did buy and sell a little bit to reduce that average down. What I probably would have done different was I did sell some at 44K when we were trading over here, at 44K and 48K. And then again, I sold a little bit at 52K. It really wasn't much. I think in total it was about 15% of my entire position. So I'm still largely in Bitcoin overall. And part of selling was one, I thought that we were actually going to be coming back down to do some more trading in this 30K region, and I wanted to sell high, buy low. And two was to free up capital to get into some larger positions within alts. So something that I would have done different was probably just sit on the Bitcoin and ride it up until we started getting this really corrective type of wave. But I'm now looking at this with hindsight. So hindsight is a beautiful thing. We got some pretty volatile wicks when the ETF came out. I think we ran up to 48K and then dumped to 38K. That's a 21% move, all within a few days. Yeah. So yeah, Bitcoin, I'm happy with what I've done. Alts, not so much. I think I've dropped the baby a little bit when it comes to alts. I'm currently holding about 10 cryptos in total. We'll just and I haven't updated this in a little while. Yeah, 1, 2, 3, 4. Yeah, I'm holding 10 because Adam doesn't exist anymore. I offloaded that. Yeah, I think I did have quite a bit of research, but it hasn't necessarily paid off. The averages that are there are pretty accurate, except NIA's a bit lower. Uni's also a little bit lower, and so is preprints, but the rest are quite accurate. So, outside of NIA, Uni, and CAS, the rest of the alts, and I suppose Sweat, depending on when you're looking at the chart, the rest of my alts, I'm pretty sure, are currently in the red, which isn't great. I do control my risk exposure to alts by only having an extremely small portion of my portfolio towards them. So as you can see, I've got 81% of my portfolio is in BTC, and the remainder is virtually in the alts, but it's heavily weighted towards NIA, Uni, and now Ethereum, and I've got CAS coming in fourth position. The rest of them have got they've got substantially smaller investments in them now. Especially because
He could have got
I
hit. I mean,
changed my portfolio around.
he's the type of
I think it
person
was
that
about a month or so
COVID's
ago.
going to hurt.
They just weren't performing, and it does go to show that sometimes you might have a great project in front of you and it looks fantastic on paper, but it just doesn't have that adoption for whatever reason. It may have great tokenomics as well, but it still doesn't have that adoption, and the price doesn't go up. So, something that I'm going to actively do for the next cycle is I'm going to cull how many alts I'm willing to hold, probably down to about 5, and just have similar conviction. Maybe I might have about 85% exposure to BTC and have about 15% exposure to those 5 alts. But I'm going to steer clear from the small caps. I think they haven't really performed that great for me, at least anyway. I know Fon did all right. It got up to about $5, but I had my Fon is still locked up for 12 months. I think that ends in around November, December. So I couldn't really take advantage of that. But if you see a pump, you need to sort of hit it and quit it, exit your position. If you want, maybe buy back lower, but realize those profits because they may not come back. That's something that I've definitely learnt this cycle. There hasn't been too many alts that have continued on the push up. With there is some like, for instance, Solana has done extremely well. Render was doing extremely well. It's in a bit of a lull at the moment. Kaz has been doing extremely well. I got in quite late. It had already gone up hundreds of percent by the time I got in, but I'm currently sitting about 70% in profit at the moment on my Kaz position for getting in. I think I only got a position back in around April. So Kaz is doing really good, but and I don't want to shit on Sweat, but Sweat's one that if I had my time again, I wouldn't invest. Uno wouldn't invest. Fon wouldn't invest. HDN wouldn't invest. Adam, it's trash. I kick myself every time I think about it. Uni isn't doing the best either. But I do have a bit of hope for Uni. I probably would give it another go. Cello, I probably wouldn't go near again. Pre-prints, that's like going to the casino and playing roulette. So yeah, I'd probably still invest in that one, but maybe just carton a beer on it or something. I'm more interested in seeing what cryptos get released on the back end of the when we top. So cryptos that are getting released during this period that show a fair bit of life when they get released, they can then crumble. That's fine, but I'm going to be taking notes of those ones that get released to the market during this period. And the reason behind that is, and hopefully I can bring up a chart because I have recently changed their ticker. All right, sweet. Well, that's interesting. So Render wasn't available on hardly any exchanges during this period over here. It only sort of became mainstream and listed across exchanges. It was as Bitcoin was peaking the second time around, and then it sold off. So that's actually interesting about that. I wonder USDT. Oh, I was trying to find a chart that would show when it got released on like Binance and the like. maybe buy a bit. Okay, here we go. So this is when it got released. It was like literally a few weeks after Bitcoin made its all-time high, and it got released, went parabolic, and then just sold off into smithereens. But it showed a lot of, it gives a lot of promise when it comes out at this high valuation and then dumps like this. Not all cryptos have done it, but these are the type of cryptos that are coming out that I'm going to be keeping an eye on and just seeing how they perform when they do get released, if they get released at the back end of the bull market, start of the bear market. But I think moving forward, I'm going to just take a lot more of a conservative approach and a simple approach. I felt that this cycle I've been quite busy looking in charts, maybe losing my train of thought a little bit, where I want to have a bit more of a not a set and forget, but just a simpler profile to manage and take care of. Yeah, thanks, Hunter. I didn't even see that you joined us. Sorry, mate. All right, now do want to talk about Ethereum, just with the ETFs that are probably going live in about an hour. We can pull up the chart. Um, so my concerns, I do have some concerns with Ethereum, and it's with forgetting that we've been having this correction going on now for 4 or 5 months. What my concerns are is that Grayscale owns $10 billion worth of Ethereum, and I just really struggle that there's going to be a demand for their Ethereum ETFs. And the reason for that is that it's not a store of value. People that are holding the ETF, they can't get yield like they can if they're using Rocket Pool, or staking via an exchange, or using Lido Finance or anything like that. And I can't remember 100%, but I'm pretty sure I saw that one of the ETF issuers, they filed a seed round for purchasing Ethereum, and they were only looking for a $4 million seed round, which seemed very light on for me. So given that there's $10 billion of Ethereum, and in comparison to Bitcoin, it's about one quarter of the holdings of what Grayscale had in Bitcoin. I just don't think that there's going to be at least a quarter of the demand for Ethereum as what there was for Bitcoin. So that definitely does cause a bit of concern. But what we do have is, back when Bitcoin ETF came out, it was after we had this very decent run up. I know I'm looking at an Ethereum chart, but it doesn't really matter. It was after we had this big run up, so it was due for a correction of some sort, and we got it with the ETF. What we're doing this time around is we've been correcting quite severely as well. So we are now coming to a point where we're due to break out. So from a bullish, it can be bullish. Once we start delving down into the smaller time frames, it's a bit like when the Bitcoin ETF came out. We've just been having a bit of a monster run out of the lows here, and now we're getting the Ethereum ETF. So we're probably going to have a bit of a pullback. Certainly, I probably think today, maybe tomorrow, perhaps for the next week, we could experience a little bit of sideways and a little bit of a pullback. But then looking into maybe perhaps next week and the week after, we may start see this taking off again. So I do have concerns, but when you put the whole picture together and you zoom out and you look at what happened with the the Bitcoin ETF, how we were running up during this period. Bitcoin ETF dump, and then it took off again. Maybe we get something similar here. Perhaps it's less harsh, and we start taking off again. I might jump into BTC, and we can have a look at some of the lower time frames here. So I've got quite a few levels marked out. We've lost this 67.3 level, so it looks like we are gearing up for a bit of a correction on Bitcoin, which does coincide with what we were just talking about with Ethereum and the Ethereum ETF coming in with a bit of sell pressure. What we want to see though is if we're not going to correct, we need to see this level at 67,300, 200 around there reclaimed, and then these highs taken out at 68.3. They're the immediate key levels for Bitcoin to continue this upward trend, to start tackling some of these higher time frame key levels. Around here at the 786, we've got the top of the channel, which I'll zoom out so we can see that properly. Which that's the top of the channel, just there. Then we've also got these tops at 72,200, give or take. We did get up to 72.8, 72.9 back here. I don't really think that these tops over here are that important anymore, because we've got this channel, we've got these tops here. Once it gets out and breaks these tops, it's off to the races. I think we may get a retest of the channel on a lower time frame. So if it does pop out, maybe it goes something like that. But that level at 72.2 and the top of the channel, for me, are the most important levels to the upside. It's inevitable that they're going to break, but they're the levels that need to break. When looking at this on a medium time frame for this last wave of the bull market. Got him. Now to the downside, I really want to see 63 600 hold up here. It's the 50% level from the all-time high to the 53.5k low. It also has some confluence with being support here. When we pumped up, had a little retrace, found support, and took off again. It was also back over here before we knew it was a 50% level. It was also a rejection zone. And we can even see back here it has provided some resistance at times as well. So for me, I don't want to see a daily close below the 63.5. Certainly not 2 consecutive days. That would start ringing some alarm bells that perhaps we're going to be coming down to 59k, which I don't really want to see. We can come down here. It's not the end of the world. The real alarm bells, sell your bags type of stuff starts coming in if we start getting into the 40k region. That's my exit strategy. If we start getting down into the 40ks, that's when I'm virtually going to be selling my bags, and come back in 12 months' time. But I don't think that I think it's highly unlikely that plays out at this stage of the market. I think we're on our way to breaking up, particularly when you look at those 2 weekly candles. They're extremely bullish. We've seen them before. Range trading, 2 extremely bullish candles. These did break up past the highs, but it continued on. Again, 2 bullish candles. That's coming out of the bear market into the bull market. We got two bullish candles coming out of it, and off it went. So when you look at that in contrast, these are they're not identical. They're not the same, but they've got the characteristics of those previous candles that we saw. Let's see if there's any no triple tops. Nah, I don't think there's going to be a triple top, Hunter. I don't think they'll give us that many chances to exit our positions if it is the end. If this is the end of the bull market, and this is hypothetically speaking going into a bear market, it's already over, and this low should get taken out, and we'll start flipping this channel into resistance. We'll start trading down here. Might jump into NIA, because we have seen a bit of a pullback on NIA lately. It was extremely bullish coming out. And I can't remember if this was last week or the week before that I wrote this, that I drew the price action here. But it's done really well. It looks like we're coming back down to test for some support. It was holding that $6 level quite well, but now we're back below. So I think the next level that we're going to look at is around that $5.60, $5.50, which, as we can see, it's pretty much the highs of this range over here, where we got a bit of a double top. We can see that double top, and then it came down, put in the low, and we sort of fought out of it and broke out of this range. So this would coincide with Ethereum sort of selling off today, tomorrow. I really don't want to see NIA get a couple daily closes back in this range. That wouldn't be great. And I should really update this 50% level. So maintaining that 50% level is also quite imperative. So if we do break below these highs at $5.50, we can come down into this range, but we want to see the daily close back out of it. So it'll just be like a quick wick, similar to what we saw back here when we wicked into the golden pocket and then we took off. If we can get a quick wick and then pop it back up, that'd be fantastic. And then we can continue on taking out these highs at $6.50, starting to tackle around that $7.70 level, and moving out of this accumulation range that we've been stuck in. I think once we do get up to around that $8 mark, it's just going to start taking off. It's going to go pretty quickly. We know NIA can move when it wants to. We saw that out of the lows here. It went up, what's that, about 60% from its low, maybe even a little bit more. $4 to $6.50 is pretty impressive. So when it wants to move, it can. We're just going to have a bit more patience. And it's sort of hinging on what's going on with Bitcoin as well and Ethereum. I think we're going to see the markets sort of break out mostly together. So why a strategy to sell BTC if it gets 49k? Isn't it better to sell it now? Okay, so the strategy start is, in my thesis or my approach, is that we're in a bull market and we still have time to go up. And I've got two areas that I'm looking at for us to sort of peak at. One of them is pretty much in this zone here between, we'll call it 120k and 94k. And The other one, I think I deleted it. That's not good. The other zone is around 175k, which are a bit skeptical about getting up to that level just yet. So this is probably my primary level for the time being for us to get to. The strategy for exiting at 48, 49k, or 44k, whatever it might be, that's invalidation that I was wrong and we're not actually in a bull market. We've the bull market's over. We're going into a bear market. The bear market's going to last at least 12 months. So the invalidation is. Oh, let me get to the daily. Validation is really getting back below here and trading down here below 50k. That's what it is. It's what it simply is. So you have to have some risk when you're investing, but you also want to have managed risk. If it breaks below 50k and starts trading at 48k, 47k, and I think that the bull market's over, I'll sell there. I'm still getting just over a 2x on what my investment is in Bitcoin. But I'll just wait it out 12 months until it's trading down at 20k, 15k, and I'll buy back in again. Yeah, that's correct. Well, it's not really even worst case scenario. It's just invalidation of what your idea is. You need, whenever you're trading, you need to have an invalidation level. You don't want to ride and die to zero or a million. You need to be able to keep your capital safe. And for me, that's where my safe zone is, my invalidation on my idea is. And it's fine to be wrong as well. We don't know what's happening over in the black part of the chart. We can just go off the price action that's happened. So, was there any charts that you guys wanted me to have a look at specifically? Yeah, no worries. We can look at Solana. Oh, actually, before I do, we'll just check the near BTC chart. Okay, so this is actually looking quite good. We did get our break out of the range, and we're currently coming down and testing those prior tops. So we want to see this level sort of held. We don't want to fall back into this trading range again. Certainly don't want to be breaking below these lows. But the fact that we put in a high is great. Starting to see some strength come back to near against Bitcoin, which is good to see. So we could actually see quite a run up to probably around the 10,000, 11,000 Satoshi level, something like that. Because at the moment we've got here acting as resistance. As we can see, we rejected. The next level of resistance we saw over here for these tops, but it was also support over here when we were trading up in the highs. And we actually also got heavily rejected back here on a quite an explosive move up. So it's looking good. But anyway, we'll get into Solana. I might start with the BTC chart for Solana. So again, Solana's looking good as well. It's probably looking better than NEAR, to be honest. It's got a lot less overhead resistance against Bitcoin. We'll see if weekly chart looks a bit better. Yeah, weekly chart looks better. So as we get overhead, we literally just have these 3-4 candles over here. that's acting as resistance. There is prior trading resistance over here, so we could potentially see a run up to there, and then it comes back down, tests these old tops for support, and then it can potentially break up again. Actually, you know what? I might leave. I might draw it nicely, and we can check back in a few weeks time, and see what's happened. See if we got something like that. And obviously, you can keep drawing on for forever. That'll come back down. Test to see if that's been flipped to support, and then off it goes. But we'll jump into a Solana USD chart. Actually, I think. So Solana's looking very bullish, even more bullish than Bitcoin. It's very similar to its BTC pairing, where on the weekly chart, it's only got these 4 candles over here that's acting as resistance, and it closed an extremely bullish candle right on the bottoms of these candles. Has had a bit of a pullback this week, which is fine, but we've got these tops over here, probably between that 160 to 170, 165 to 170 level. You can see a bit of a pullback, testing that there, flip to support before it takes off again. And it's all correlated with sort of what happens with actually we might go to the daily, see if we can get a nicer horizontal. So the reason I've picked to put the line there, and it doesn't really matter how far down you go. Well, it does, but you can get within a few dollars either side. But where the line is right now, see the daily closed on it, jumped above, held it as support on the test, took off. We saw a wick through, bounced off it, and it was almost like a pivot line through this price range here. Couldn't get a close above. Then it got the close above, held the daily close, then it sold off. So, and we actually saw something similar. The daily close was just on the line. Now it's popped above. It's bounced off it. So it's probably going to come back down to test it. But it's got a lot of structure now built up throughout this period. I think it's looking pretty strong. The only thing with Solana that has me cautious is just the market cap. It is getting up there. So yeah, it's risk reward. I think if you were buying in the past few months and you've got like a DCA of maybe 145, 150, something like that, I think you're going all right. You'd probably be able to get it maybe a 3x in the next maybe 6 to 12 months. But I wouldn't be expecting too much more than a 3x from the current price. Probably around that $500, maybe $600 mark is the absolute peak in my mind. But looking at the charts, it's looking extremely strong compared to a lot of other alts. Where it's come from down here, how it's trading now, it's looking extremely strong. We can go pick HBAR, for instance, which is looking shite. It's just crap. Nothing like the Solana chart. and that there was a scam news event. So always fade the news, as we can see. Another fan favorite, where is it? XRP. It has been doing okay lately, but it's still, when you zoom out, doing shite. So you wouldn't catch me going near this either. Looks completely different to the Solana chart, even the near chart. Wouldn't go near it. Yeah, that's right, Baldrick. All right, guys. Well, thanks for letting me ramble on for about an hour. I hope that things were clear enough, and if you've got any follow-up questions or more direct questions, feel free to chuck them up in the premium chat, and I'm more than happy to answer them. I will be getting back to you guys that have put up some charts in the coming days for Ethereum. Would love to see some price predictions from you guys if you get a chance and you want to do it. Yeah, I always find it interesting how people get to certain points and how they got there. So yeah, would love to see what you guys come up with. But yeah, we're jumping in the. Oh, am I still in the chat? Yeah, we're jumping over in the Sweat Hangout tomorrow, so feel free to jump in and join us. It'd probably be a lot more, I suppose, relaxed version or basic version of what we do over here. But yeah, feel free to join us nonetheless. And then until next time, stay safe, and I'll speak to you guys later.